So basically my role in the market information team, we have deliverables. Basically we're trying to create a more transparent marketplace for our levy payers through pricing, surveying processes, tracking sale yard prices, stuff like that. We also try and provide them with the right information and the right tools to assist them in making better informed marketing decisions. So I'm going to give you a bit of an overall view of where we're sitting in terms of sheep production, in terms of the national flock, where we're headed, look at international demand, look at global demand for sheep meat. I use a lot of charts because we love charts. We sit there looking at trends and all day, every day. It's not everyone's cup of tea, so I've tried to limit the amount of charts I use, but those I do use, I'll try and explain why I'm pointing them out. But as I go along, if anything's unclear, please shout out. I'll try and be as clear as I can, but yeah, ask me questions as I go along. If I can't answer them, I should be able to find a place where you can find the answer. So I've separated this into three key areas I'll discuss today. So domestic supply, so where's the flock sitting, what's slaughter doing, where are we headed? Demand, so look at demand within Australia and international demand for sheep meat, and how that all translates into farm gate prices at the end of the day. So on to domestic supply. Yeah, all good. So we've got the season, the Australian flock, and then we'll have a look at some slaughter trends. So to start with, in terms of supply, the key thing at the moment, the biggest thing affecting the nation is the drought, basically. There's been plenty of droughts in the past, there'll be plenty of droughts again, and as Hamish was describing there, it was really interesting to see some of the different ways that the nation's producers are managing drought, and they're becoming really good at it as time goes by. The people I speak to though, it's sort of interesting, and particularly around people around New South Wales. So this chart on the left is a 6-month rainfall deficit. So the red areas is below average rainfall, and the darker red is well below average. So it's pretty much a nationwide event, and that's kind of the defining factor of this drought, and makes it a little bit unique is it's really bad everywhere. And New South Wales Department of Primary Industries declared 100% of the state to be in drought in August. So a lot of the safe areas, or considered safe areas, are actually really dry this year. So your Liverpool Plains didn't get a crop this year. That's basically the first time that a lot of farmers in that area can remember that happening. And that's on the back of a pretty dry 2017. So the implication that has for livestock producers, as you'd all know, is limited pasture growth, higher demand for feeds. So basically we're not growing a lot of feed, so the cost is going to spike. And also due to the limited rainfall we've got throughout the Murray-Darling Basin, stock water is actually becoming a bit of an issue, and it'll probably become more of an issue without rain as the summer progresses. Around the country, I went to WA recently. They had closer to average winter rainfall. Southern Victoria and even southeast corner of South Australia, closer to average conditions. But pretty much everywhere else it's been pretty bad. This chart on the right is the 3-month Bureau of Meteorology outlook for October to December. Not sure how much we can draw from that, but it's not really pointing to a wetter or drier 3-month period. And the thing about if we do receive average rainfall in a lot of those areas, it's probably not enough to alleviate the current drought situation. So the national flock, in 2017 we hit about 72.5 million. We forecast a fall of about 4 million in 2018 before a gradual expansion occurs. So basically all the drivers are there to push an expansion of the flock. Historical high prices for sheep meat and wool. It's just really the season hasn't allowed for an expansion. A lot of people sending more cull ewes to sale than they would have hoped for. One thing to point out is if we look at this chart over time, back in the year 2000 we had over 100 million sheep, and we're closer to 70 million now. The ewe flock's actually become more and more productive. So in those first 5 years of the millennium we were slaughtering about 17 million lambs every year. In the last 5 years we slaughtered probably 22.5 on average million. So that's driven by genetic improvements, targeting twinning ewes, and all that type of stuff. We're also producing more meat because the carcass weights have been on the rise as well. So your South Australia, home to about 11.5 million head, or 16% of the national flock, and some of the largest national resource management regions of number of sheep, are right around us here, so it's a pretty important region for the national flock. So on to slaughter in 2018. So this chart shows weekly lamb slaughter, and it's collected by the MLA team in the North Sydney office. We survey all the processors and ask them to present us with their kill figures for the week. So basically that darker red line and that dotted green line is the 5-year average. The darker red line is the 2017. So you could see it sort of followed the 5-year average. This year it's been quite a volatile year in supply-wise for lambs. So that autumn period we had a really high turn-off. You can see that yellow line was sort of trending a long way above the 5-year average. The ABS data, which is 6 weeks out of date, so I didn't use it today, but sort of January to June, lamb slaughter surpassed 12 million head for the first time on record. So there was plenty of lambs getting around. Things really started to turn around in the second part of July and August, and there became a real supply shortage of finished lambs. So those lambs getting up above 18 kilos carcass weight. That was basically due to the season. The people we speak to, they were saying that limited pasture growth was creating a lot of difficulties in getting their lambs up to that slaughter ready weight. And those that did get the lambs on the ground were saying that they were probably going to be 4 to 6 weeks later than a normal season. And that supply really bit during August. In the last couple of weeks, particularly in southern Australia, yardings have been on the rise. So your Horsham, Bendigo, sale yards like that, and South Australia is up a lot year on year. So the spring lambs or the new season lambs have started to come through in southern yards, and you're seeing a little uptick in slaughter. That little dip in the yellow line there, that was last week. It was a 4-day week with the AFL Grand Final, but we'd expect to see the yardings start to slowly rise back up towards the 5-year average. New South Wales is a bit of another story. Unlike Southern Australia, the lambs really haven't started hitting the market yet, and it's going to be really hard to predict where they're going to come from for the rest of the season. We sort of heard reports of some of the regional marking rates really well down, especially in western parts of the state, and that's despite producers doing everything they can to keep that survival rate up. It's just been a really difficult season, so it's going to be really hard to predict where the lamb supply and the finished lamb supply is going to come from for the rest of the year. On to sheep slaughter. It's kind of the opposite story. We've had a lot of people calling in the scanners, as Hamish suggested. They were called in early, identified anything that wasn't pregnant. Any older ewes, any poorer condition ewes were sent through to the yards and sold. So slaughter, we're looking to hit sort of that 9.3 million for the year. We've got forecast, which is up about 20% on last year, and it's the highest annual slaughter since 2014. But yeah, that kind of tells the story of the season, is that sheep slaughter. Despite producer intention to expand the flock, they just really haven't had the option given the season this year. So in summary, the drives of supplies, so drives driven a spike in sheep slaughter. Lamb supply will probably continue to be volatile for the rest of the year, and we'll talk about how that's been affecting prices a bit later on. So on to the demand situation. So Australia exports probably 60 to 70% of the lamb we produce, and about 90 to 100% of the mutton we produce. So export markets are really important to producers in terms of prices, but also the domestic lamb market is really important. It's still our largest single market. So I got this chart off our market insights team. It's a bit going on, but basically it's a chart showing global consumption of sheep meat, so lamb and mutton meat. The little green bars starting in the year 2000 is lamb consumption in developed nations such as USA, Europe, Australia, New Zealand. And you see that's been fairly flat over a long period of time. The red bars are consumption in developing nations. And with sheep meat, that's the Middle East, North Africa, and China, and parts of Asia. And you see the growth is really being driven by those developing nations. And that's due to a range of factors, not limited to, but including population growth, rising incomes, and also increasing awareness of sort of the high protein Western diets. So a lot of the growth is being driven by those developing nations. There's a lot of sort of pressure in terms of prices relative to other proteins for lamb, for sheep and lamb, which is having an effect on per capita consumption in developed nations. Whereas in those developing countries, as incomes rise, per capita consumption of sheep meat has actually been on the rise. Sort of get asked a lot about different markets, so I thought I'd talk about a couple of key ones for us at the moment. So China. China is the world's largest producer and consumer of sheep meat. They've got a sheep and goat flock of over 300 million. I know they're different species, but in some regions in China, they call goats mountain sheep, and they kind of work in the same avenues. So basically, they produce a whole lot of sheep meat themselves. There's a little slither right above what they produce to what they want to actually consume, and that's only about 5%. And that little 5% is where Australia and New Zealand target with our exports, and that's such a huge area. They've got a growing middle class, so there's plenty more people getting into, plenty more households entering that $35,000 a year plus in income. We enjoy a pretty decent trading relationship with China. We don't have a lot of import tariffs, and that's moving down to zero by 2023. We don't have any volume restrictions. The largest barrier with getting into China is the technical access. So that's getting more plants allowed chilled meat access to China. And there's a lot of work being done through Australian Meat Industry Council, MLA, Australian Government, Department of Ag. There's a whole lot of work being done all the time trying to target that. We've had a few setbacks over the last couple of years. There's been a lot of tensions in global trade and stuff like that, but China represents a great opportunity. USA is more of a longer term trading partner for Australia. It's only a smaller ethnic part of the whole population over there consumes lamb meat, but such a big country that a small part of that population is really important. Basically, in terms of global trade, Australia and New Zealand account for about 70% of world exports, but probably less than 10% of global production. So there's really only our major competitor is New Zealand. They have limited capacity to expand their exports due to their changing land use, and they've only got about 30 million sheep. That's steadily been declining, more and more people moving into dairy. So Australia's placed in a really good position to capitalise increasing demand for sheep meat worldwide. It's frozen. Cool. So this is lamb exports for September, year to September, trading back from 2000. As you can see, we've risen and risen. Already this year, 2018 lamb exports are up 8% year on year. That was driven by that high turn-off in the first 6 months of the year. Lamb slaughter's sort of taken a dip throughout August and September. September lamb exports are actually down a little bit, and mutton exports surpass lamb exports. But these destinations, some of the really good growth in the Chinese market, which is this darker blue here. Middle East has also grown a lot. So it's a really good spot. So basically, if we're going to sum up demand, it's a really positive story globally. Global sheep meat consumption has doubled since the late 90s and is expected to continue to grow, driven by Asia. Global production of sheep meat is failing to meet demand. Australia's in a really good position to meet that demand. So how does all this, so hopefully I've given you a bit of a summary of where we're sitting in supply situation, what the demand for global beef meat, sheep is, but how's that going to translate into prices? Now we've got the first point here, I've said it's rising returns. Now all you guys are producers and you would have known over a long period the prices you're receiving have been increasing for both wool and for lamb meat. Someone asked me to actually calculate some averages based on ABS data from average lamb carcass weights, marking rates, and the Eastern States Trade Lamb Indicator, and we could come up with a calendar year average of what the ewe would earn based on those averages. Also add on top of that a wool earning, so based on your clean wool yield and the Eastern Market Indicator. And I was able to come up with a chart that charted fiscal year earnings per ewe over time. And this is what it looked like. So back in the 2001 fiscal year, it's based on a lot lighter carcass lamb, sort of that 17 to 18 kilo carcass lamb, and a lot lighter price in the sale yards. A ewe would probably earn $41 off a lamb on an average, and $23 worth of wool. Fast forward to 2017 to 2018 fiscal year, the lamb amount is up to 158, wool's at $50. So it's been a 7% average annual growth rate since 2001. So I grew up on a mixed farm in northern New South Wales, and we had sheep, cattle and dry land cropping. And I campaigned for many years for Dad to get rid of the sheep. I used to whinge about having to help out in the sheep yards and drenching the ewes and getting burrs in my hands, and I said, why can't we get rid of them? Everyone else in the district has. And then I saw this chart and I called him and I apologised and I said, you were right all along to keep the sheep, and let me know when you're marking the lands and I'll come home and give you a hand. But yeah, it's really been a positive story, and whichever way, producers have gone into obviously more meat breeds, or they might have targeted the wool, but incomes have risen over a long period, which has sort of an impact on where we think the flock's headed. So on to prices this year, and this is a chart showing the Eastern States Trade Lamb Indicator. It's really been the talking point of the season. So basically we come up with this indicator through our livestock market operators. They go and report on sale yards. And the Eastern States includes South Australia, Victoria and New South Wales. So the trade lambs are those 18 to 22 kilo carcass weight lambs, and we come up with a 7-day rolling average in a cents per kilo carcass weight indicator value for that indicator. So basically we had a chart on the wall that was trying to keep up with record lamb prices this year, because our breakings every week, once or twice a week, and we had a little mark. It was like $320 at Wagga, and then it was like when your mum used to mark on the wall when you were growing. It was just crazy. And then every time I went to make this chart, I had to readjust the axis. So in June it went over 700 cents per kilo for the first time ever, and then we quickly rose up above 800 cents, and we were almost going to hit 900 cents. It peaked at about 880, and since that time it's come back a lot. And you might remember, basically what was causing this peak in price was that supply shortage of finished lambs. So producers were saying they were having a lot of trouble getting the lambs up to that slaughter ready weights. Underlying demand fundamentals are there, so a low Aussie dollar, good domestic demand, good export demand. They just couldn't get the numbers, and so that resulted in a price spike. And in fact, the heavy lamb indicator, so the lambs weighing more than 22 kilos carcass weight, actually surpassed 900 cents per kilo for a period of time. Lighter lambs were trading at a fairly large discount on $1 per kilo basis, and that's probably those restocker lambs less than 18 kilo carcass weight, probably due to the fact that there wasn't a lot of people chasing, wasn't a lot of restocker interest in the yards. All the prices have probably come back a lot, which might be a little bit disappointed, because I know a lot of you guys speaking to you, a lot of people are looking to sell lambs in the short term. But if we look at the 5-year average, that green dotted line for the ESTI, or the Eastern States Trade Lamb Indicator, it's around about 530 cents. And I think yesterday when I checked it, it was up at about 680 cents. So really it looks like what's going to continue to drive this in the short term is supply of those lambs. And that's pretty hard to predict given the season. Looking onto the mutton indicator, and if you remember how the numbers coming through, it's basically abundant supply. This has probably been the hero of the season, this mutton price. So a lot of people, like speaking to my dad, and it's a lot of people who've been through drought periods before, they were saying that, you know, some times when you got to turn off older and light ewes, they weren't worth trucking them because no one would buy them. This year we've found a market for a mutton. China is a really good mutton market. There's Southeast Asia, so Malaysia in particular, and the Middle East, they're taking a lot of boxed mutton. And it's a pretty promising sign for when times do turn around, that we've got both really good markets for mutton and for lamb. So where are we headed? That's what we really want to know. And I'm on camera, so I'm not allowed to make any bold predictions. For various reasons, MLA, we don't make pricing predictions because it has wider implications. But so this is a combination of two charts I've showed you earlier today. So the yellow line maps eastern states' weekly lamb slaughter. Now it peaked in May, June, and started to rapidly decline as the winter progressed and turned from a really dry autumn to a really dry winter. That supply of finished lambs really started to cut out, and the price of the eastern states trade lamb indicator, the green line, really reacted quite symmetrically to that. Ever since the start of September, when yardings have been up in southern Victoria and southern South Australia, more supplies started coming online for the processors, and the prices responded pretty quickly. So that eastern states trade lamb indicator, as I mentioned before, fell from 8.80 cents to about 6.80 cents. So it's pretty decent fall. Longer term, I think it's a really positive picture for prices, which we see that basically global production isn't able to meet the growing global demand. Australia's in a great position. We look at all the technologies we've got and all the advancements in the productivity of our ewe flock. We're in a good spot. Short term, it looks like we're basically being driven by supply of those finished lambs. And it's coming down to sort of a lot of it's what's going on in New South Wales, because they're home to about a third of the nation's ewe flock, and it's been a really difficult season there. So that's basically what I just said. Shorter term, finished lamb supply driving prices. Longer term, growing global demand. So how do you stay in touch with us? Things change really quickly. So this is how we report on our market information team. So we report on 3 sale yards in South Australia, Narracor, Mount Gambier and SA Livestock Exchange. That's on a weekly basis. We publish those reports online. We come up with our eastern states daily indicators, which get published online daily, that I mentioned. We have over-the-hook indicators through our processor surveys. We have slaughter reports. We have longer term analysis, so the stuff I talk about, some of the market news stories and the projections, which is what I've talked about. And that's available on our website, which is, so if you Google MLA, you'll come up with this. If you want to find out more of the stuff I've been talking about, you click on that Prices and Markets little button in the top corner, and then you're basically looking on this left-hand pane. You will find some decent information if you keep looking. You see there's over-the-hooks reports, sale yard market reports. I think I've given an example of what I clicked on. So this is Monday's over-the-hooks report for South Australia. You can look at your lamb prices for different specs and stuff like that. You get an indicative price. This is SA Livestock Exchange. I think it was the sale this week. So you get the market commentary from our livestock market operator and the data. That's about it.